Hey folks, today's topic is all about the Federal Reserve, interest rates, and what it means for you. So the big news, the Federal Reserve might cut interest rates in September. This would be the first rate cut since March 2020. Why is this important? Well, it all started with the minutes from the Federal Open Market Committee meeting. Turns out most Fed officials are leaning towards a rate cut, but it's not a done deal yet. They're waiting for more economic data to make the final call. Now let's dive into the reasons behind this potential rate cut. The Fed wants to keep the labor market from cooling off too much. Recently, we've seen some weak job numbers and the Fed's worried about rising unemployment. Plus, they're aiming to keep inflation close to their 2% target. That's easier said than done, right? With inflation and economic conditions being tricky, the Fed is on high alert. Currently, the Fed's benchmark rate is the highest it's been in 23 years, sitting between 5.25% and 5.50%. Cutting rates from this high level would be a significant move, showing just how serious they are about supporting the economy. So, what does this mean for the markets? Well, investors seem pretty happy about the news, as this would be the official pivoting of the Fed. The S&P 500 has been climbing and Treasury yields are dropping. This shows growing confidence that the Fed's potential rate cut could bring some relief. Even the pound has strengthened against the dollar, suggesting that folks expect different approaches from the Bank of England and the Fed. But everyone's waiting for the big event. Fed Chair Jerome Powell's speech at the Jackson Hole Economic Symposium. He's expected to give us more clues about what's coming. Investors, analysts, and pretty much everyone in finance will be hanging on his every word. The big question is, how much will they cut? Most experts predict a cautious 25 basis point cut. Others think it could be a bigger 50 basis point cut, especially if August's economic data continues to look weak. Bond traders are even betting more on that larger cut, showing there's some uncertainty. All right, let's bring this home to you. What does a rate cut mean for your wallet? Lower interest rates could mean cheaper loans and mortgages. Good news if you're looking to buy a house or refinance. But it might also mean lower returns on savings accounts. So there's a bit of a trade-off there. For the job market, a rate cut might help keep employment stable. If borrowing gets cheaper for businesses, they might invest more and hire more workers. So if you or someone you know is job hunting, this could be a positive sign. To sum it up, the Fed is signaling a rate cut in September, mainly to support the labor market and hit that elusive 2% inflation target. Markets are reacting positively, but the exact size of the cut is still up in the air. Jerome Powell's upcoming speech will be crucial, so stay tuned for that. And in the meantime, keep an eye on how these potential changes could impact your finances and job prospects. That's all for now. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more updates on finance and the economy. Thanks for watching.